have an unstoppable market. Hello everyone, this is Ahmed Saleh and this is the weekly market recap. And now to the key messages. So the market achieved a new all-time high last week, and that's because of the interest rate cut. That was expected, but the surprise was in the Fed tone. It came more dovish than what the market expected. The S&P in September is now at 3%. Year to date is 13%. Nasdaq is at 5%. In September, year to date is 17%. Really a great year so far. The question is, will the market continue to go up? Let's see. Now to the details. So what happened last week? We had a very good week, going up by 1.2% in S&P, 5.3% in Nasdaq, and even the Russell 2000 going up by 3.4%. The market already expected 3 rate cuts this year, but the probability of the rate cuts increased after the Fed meeting. So before the Fed meeting, we had 78% that the Fed will reduce rate by 0.25% in October meeting. It increased after September 17 to 92%. The same for the meeting in December 10th. We have 70% that the Fed will reduce the interest rate by 0.25, and that's increased to 79%. So this is what is called the dot plot, and it's basically called the dot plot because each one of the 19 members is putting forecast for what is going to happen in the coming few years in terms of interest rate cut. The dot plot is happening once every quarter, in March, in June, in September, and in December. In September, we had a release of the dot plot, and there is no big change. There is only a 0.25% increase in the current fiscal year to 3 rate cuts in September and October and in December. And the coming 2 years are the same, 0.25% in 2026 and 0.25% in 27 in both dot plot in June and in September. The real surprise was basically in 3 things. One, we have more split Fed than before. So before last meeting, we had a unanimous decisions by all members. Today, we have more split Fed, and even we have one person in the Fed going down by almost 1% directly this year to an average of 3% versus the 4% that we have right now. And there are more members that are skewing toward more rate cuts. That's the first surprise that came. The second surprise was basically that Jerome Powell was focusing on the weak job market. He repeated time after time after time about the weaker job market than anyone had expected, and that he wanted to move faster because of this. He also pointed out that the inflation due to tariff is just a transitional one. It will increase the prices by one time, but after that, there is no more effect of the tariff. So the 3 reasons caused the market to interpret the Fed as being more dovish than what was expected, and they think that the rate cut in 2026 and 2027 will be more than 25 basis points. September now is defying all the history. So September is at 3% versus a median range for the last 10 years, about minus 2.2%. We always said that we look at the history, but we also look at what the market is doing and we react accordingly. Last week, I put a video and I was implying that the market will sell the news, applying the rule of buying the rumor and selling the news. It didn't happen last week. We have seen the market continuing to going up, and now you can have one of 2 options. Either you say the market will go down, and then you continue to be out, or directly you are flexible and you change your mind and then you participate in the market rally. And this is what I did last week. We always say don't fight the tape. What is the tape? Previously, before the internet, the prices were printed on a tape, and now they say the tape that appears on the bottom of the screen. So we always say don't fight the tape. If the tape is going up, if the tape is telling you that prices is going up, be with the tape. Be with the trend. The trend is your friend. We always say this. So don't fight the tape. It's not about being right or being wrong. It's about being with the market, and if the market is giving you lemonade, you make a lemon juice. If the market is giving you orange, you make an orange juice. All right? So next week, on Thursday, we have the GDP results. The market is expecting 3.3%. On Friday, the BCE is important, and the market is expecting 2.9. it's another measure for inflation. If it came below 2.9, the market will rally. If it came above 2.9, the market will reverse back. My trading strategies are the same. Stocks breaking out of 52 weeks high or at all-time high, and stock rebounding from the key support level. Let's see what happened to the stocks that I mentioned in my video last week. STX went up by 13%, and I was saying that this is an easy trade. I didn't expect the jump that happened on Monday. It was about 8% higher, but you would have got this increase if you participated last week in this stock. The stock was going up very nicely, and I was saying it's an easy trade because we don't see at all any fluctuation. We don't see a drop in the stock that is meaningful for you to go out. So if you participated in this stock, you will continue to go up with it, and you would have got the 13% of last week. Next one is GDX, which is the miners ETF. It corrected a little bit in the middle, but then it continued to go up and went up by 3.2%. We keep it. The same for the gold corporation, the Kinross. It went up by 0.7% last week with a correction in the middle. So if this stock didn't hit your stop loss, you continue to be in it. Next one is the gold. Gold is having very low fluctuation. It went up by 1%, adding to the 1% last week. And the gold is known not to have like huge jump, but it increased by 1% per week, 0.5% per week. So it's a safe one to be in. Next one is CrowdStrike. Again, we said that we went into this with a strategy of rebounding from support. We said that we have the 200 days moving average. We have a 400 here as a great support. So we went in this stock 2 weeks ago, and we didn't know that it will go up by 13% last week. But if you are in this stock, you would have got the 13% of last week. Next one is Grail, going up by 10% last week. And again, the same strategy that we said, rebounding from support. We recommended this stock 2 weeks ago, and it's going up very nicely. Now we are hitting here a resistance line. We will see how it will perform. If it went down, we recommend to sell the stock. But if it breaks this resistance at 42, then it's recommended to continue to be in the stock. Next one is Sound, went up by 16% last week. But as you can see, the stock has many fluctuations. So this is really a tough trade to be in and accept such losses, and then you will get such gain. Next one is Rocket Lab. So Rocket Lab, we said last time that we have cup and a handle, and then we had a false breakout last week. The stock declined and went back down. I think there was some bad news that they are offering more shares to the investors, so the stock went down. And now we are at the support of the 50 days moving average, the one in red, and the green one is the 21 days moving average. So the exit point is at the break of moving averages if you didn't go out already. Next one is the Ethereum. Ethereum didn't break the 39. So it's very important for this to continue going up. It has to break the 39 and then the 40. Otherwise, it will go down. Our exit point is at the break of the 21 days moving average, and the stock is just on this support right now. Next one is ABB. The stock is going very nicely. Last week, it did 12%. So as you can see, we have lots of stocks that did 12, 11, 13%, and this is not by chance. It tells you that technical analysis really work, and the strategy of rebounding from support or buying the stock at all-time high is really working. Next one is the China ETF. It went up by 2.4%. Just watch out, it started correcting. So most probably it will close the gap. So if it didn't rebound, once the gap is closed and it continues going down, then you should sell the stock. That was it. Thank you very much for listening to this video. If you like the video, please press like, share it with your friends, subscribe to the channel, and if you have any comment or if you want to analyze any stock, then please put it in the comment and I will be happily doing that. Again, this video is for educational purpose only and should not be considered as a financial advice. Any investment or trade you make is based on your own decision and is at your own risk. Thank you very much. This was Ahmed Saleh.